Good day, ladies and gentlemen, and of our virtual audience. Thank you for joining me in this session today, where I'll be talking about the future of financial services in Africa. I would like to discuss how financial institutions and banks can address this digital and mobile first era, and how they would need to address or redefine their core banking strategy to achieve this. My name is Jaco Fourie. I am the MD of For Africa at Mambu, and I will also tell you a little bit about us during this session as well. Just because of bandwidth, I would just switch off the camera so I can share the slides. So the global unbanked population and the need to extend financial services to them gave rise to mobile money solutions. And this is estimated to be worth about $2 million in the next coming years. Now, Africa has been a fast adopter of mobile money solutions since 2007. And currently about 50% of the global money accounts active users is in sub-Saharan Africa. But everything is changing. Technology is evolving, and it's almost impossible to think how far we've come in a short space of time with technology. If you think back to the first mobile phones that could only make a call versus the smartphones that we have today that can browse the internet and has access to a plethora of downloadable apps which they can use. But this evolution brought new challenges. People, they want better ways to manage their money, and they have more choices and options than ever before. So the need to invest in technology has never been greater for financial institutions. If we look in the past years, over 300 neobanks worldwide was registered or launched services. Big Techs has also entered this race for mobile financial services and banking, and also VC investment in fintechs has rebounded to 13.5 billion in Q1 of 2021. The future of finance is changing, where change has become a new constant, and institutions need to deliver tailored services at speed to their customers. So let's look at this digital transformation. Banks used to be built to last. Now they need to be built to change. With the rise of technology adoption and the growing economy in Africa's digital banking landscape is set to develop at a record pace. And a recent survey with African banks showed that this digital race is heating up. So what are those market challenges and trends in Africa around digital? So we're seeing that banking needs to be reinvented. Legacy financial institutions will definitely see a decline in their profits if they fail to evolve digitally. Also, banks need to put their customer experience first, and adopting SaaS is a way to achieve that. Banks are spending more than 70% of their IT budgets in maintaining legacy core systems and applications, where they could better utilize that money if they move to a SaaS type of solution. Cloud solutions enable strategic flexibility. Transitioning into the public cloud can improve efficiency between 30 to 40% compared to traditional hosting solutions. Fintech is truly on the rise. If we look at the recent pandemic that we're all aware of, it showed us that agility and speed is critical in financial services. Banks with legacy systems could not keep pace with fintechs, and fintechs with mobile and digital applications serving specific needs for customers outperformed the banks with more than a factor of tenfold. So what are those top 4 challenges facing banks and financial institutions in Africa? First, not making enough profits or money. So consumer expectations is changing. There's increasing competition in the market with fintechs and obviously some regulatory pressures. So how do you build a bank or a financial institution to address these challenges, to be able to adapt to this new constant of change? So I would like to take a few minutes to talk about Mambu. Our vision of composable banking and how that platformication and composability works. I would also talk about some cloud transformation and the evolution versus a greenfield operation. So if we look at Mambu, Mambu was started in 2011, actually started in Africa, Mozambique, servicing a need of bringing financial services to the masses. We currently live on 6 continents in 65 countries. We have more than 170 partners globally, and we've got more than 200 customers with over 400 deployments. So let's look a bit more at our customers. So obviously, we started off servicing the lending market, and we've got more than 100 plus lenders globally. We service more than 40 plus banks, from small neobanks to tier 1 banks. We service 30 plus fintechs and also telcos and retailers. So looking at these customers of ours, our 200 plus customers, we service more than 43.5 million of their end customers on our platform. We've got more than 6,000 financial products configured on our solution, and we manage more than 60 million API calls per day. So let's look at what we mean by composability. Composability, if you want to build something fundamentally better to use, you need a fundamental new way to build it. So what is composability? This is an approach to design and deliver financial services based on a rapid and flexible assembly of independent best-for-purpose systems. To put it in a different view, if we look at your traditional core systems, you had your monolithic type of solutions. They're inflexible, they're slow to evolve, and difficult to scale. They were tailor-made for a specific problem until the landscape changes completely, and you had to adapt. And you also locked into that one vendor. That evolved more into a modular type of solutions. You combine pieces into a preset picture. It's hard or almost impossible to swap out pieces of this puzzle, and you're still locked into that one vendor. If we look at composability, so that's where you can combine independent components to make anything. You can reuse it, you can swap it in, swap it out, and you're not tied down with one vendor. So what is our core principles for our product? So obviously configuration versus customization. Our solution is highly configurable, and we're not doing customization around our core. It's a cloud native and API first solution. We've got a singular product focus, and what we mean by that is we just focus on the core. We're not interested in digital front ends or digital channels or downstream solutions. We want to be the best cloud core banking solution in the world. And obviously, we're a SaaS servicing model. Now, let's look at this type of transformations. So bigger banks is like cruise ships. They're large, they're expensive, heavy and slow to move, especially when you want to do some changes. And because banks need to adapt, we see a new trend emerging of speedboats. So what is a speedboat? It's an independent, it's a lean, agile solution that, that's an engine for investment in innovation. It's created to address specific market needs, and it's not held back by the traditional organizational processes. And it gives you months to results. So what does those different speedboats look like? So First of all, why would you do that? You want to combat the digital brands and new startups to attract the younger generations. So these speedboats take in different approaches. One could be to address a specific market need, like SME lending specifically. One could be for financial inclusion, where you need a whole new digital banking approach, like a new banking solution. And one is for, rapid geographic expansion. So if we look at the evolution versus the greenfields. So what is those tailored technology approaches that you can follow to modernize your core? So obviously you've got your legacy replaced, which is basically ripping and replacing, but we don't see that is the best approach in the market or the trend in the market where people do a large transformational approach. We see it more in 3 different ways. So first would be like a shared legacy. So you've got a separate team with a new core banking solution and a new front end, but you still share those business processes and back-end services. You share the back-end technologies and also the banking charter. So you can launch new products and leverage the agility of this new core to launch those products in the market. Then if we look on the edge, it's like a venture division of a bank. They share only the GL and reporting structures, and they still the same banking charter. But it's an interesting way of doing business. Then you get your spin-off, which is a totally a new division that you run off. You've got shared ownership, but it's legally and operationally independent from the main bank, parent bank. And the parent bank acts basically as a service provider. Now, Mambu has done deployments on all these different approaches. So we help our customers choose the best way for them to approach this in the market. So let's look at the open banking and API opportunity in Africa. So the API economy and ecosystem is said to be will be generating about 30% of revenues through API channels by 2025. And how is that important for banks in the way that they can innovate with APIs? So obviously APIs allows you to configure versus customize. You can deploy solutions in weeks rather than months. You've got faster time to your revenue returns, and you can automate almost anything. So you can really fast track and build the design and build of your products and services. Obviously, it's also an incubator for innovation. You can experiment at low cost and in low code. You can become agile by configuring. You can explore and deliver on future trends in the market, and you can win on your customer experience, which is the most important part. And also adapt and continuously changing in this market environment. So if we look at eight reasons why you should choose a software as a service over traditional hosted solutions. Obviously, agility is key, predictability. So for Mambu, we give you that predictability in your project, which you bring to market. Productivity increases. You've got speed to market. You can deliver new functionalities and product at speed into the market. You get resilience. So you get cloud gives you excellent uptime, stable uptime, and give you that natural resilience. Scalability. So you can scale up and down at need as your business grows or retracts. And obviously your total cost of ownership reduces by up to 70%. And you increase your innovation in the market.